Well, thank you so much for joining us today for this recorded Zoom call titled The CARES Act and Your Nonprofit, What You Need to Know. My name is Ken Tsunoda. I'm Vice President of Development at TechSoup, and I'm thrilled that Jennifer Kawar, the Chief Investment Officer at the Nonprofit Finance Fund, is joining us today. This will be about a 30-minute recording. I'll be asking Jennifer some questions about the CARES Act and the programs that it offers to nonprofits to help them get the loan financing they need during the COVID-19 outbreak. By way of background, the CARES Act is the $2 trillion stimulus package that was enacted on March 27th to help individuals, families, and businesses affected by the coronavirus pandemic. Fortunately, the law also offers many benefits for nonprofits, including $349 billion in loans through the Paycheck protection program that nonprofits are eligible to apply to, and that will be one of the focuses of our conversation today. You know, the COVID-19 outbreak, as you know, has made everything uncertain. We know in particular that many nonprofits are facing financial stress during this crisis. Some don't have enough cash reserves to cover the expenses that they face if their operations continue to be disrupted, and many are now facing very difficult financial decisions about how to retain employees during this difficult time. There are programs available to help nonprofits through this crisis. Many are grant-based, but there are also loans available, and the loans can be a good way to meet some crucial short-term cash needs, and that's going to be one of the focuses of our discussion. In particular, we'll be focusing today on the loan programs through the CARES Act. I'd like to also note that many of the details of the program have changed just within the last 24 hours. So what you'll be hearing from us today is a snapshot of the best that we know the situation as of today, Friday, April 3rd at noon Pacific. What's important for you as well to track the latest updates on these loans at sba.gov. But for now, what I'd like to do is turn it over to Jennifer. And Jennifer, to start things off, would you like to say a few words about the Nonprofit Finance Fund and your work there? And Jennifer, I think you may be on mute.
You're right, I was. All right. Thanks, Ken, for the introduction, and it's great to be with you on this call and having this conversation today. Just to give a little bit of background information on Nonprofit Finance Fund for those of you who aren't familiar. The Nonprofit Finance Fund is a national community development financial institution, or CDFI. We are headquartered in New York City and have offices in the San Francisco Bay Area, where I am based, as well as in Los Angeles, Boston, and Philadelphia. We've been in business as a lender to the nonprofit sector for 40 years and have directly lent about $900 million to nonprofits. Our loan fund currently has a balance of about $150 million in loans outstanding to the nonprofit sector. And in addition to our financing activities, we have an advisory services practice that offers strategic financial planning resources to the sector through a range of offerings, from webinars and workshops all the way to customized one-on-one consulting engagements. And the advisory services side of NFF engages with hundreds of organizations each year.
Terrific. Thanks, Jennifer, for that background. And maybe could you start by saying a few words about the benefits that are available to nonprofits through the CARES Act?
Sure. So I would say that I don't consider myself to be a subject matter expert, since I don't work for the SBA or the Department of Treasury, but we have been very focused on the CARES Act legislation since it was enacted a week ago now. And I think that the main benefits available to nonprofits in the immediate time frame are two loan programs. There is the Payment Protection Program loan, which is part of the CARES Act, and the appropriation funding available for that program is $349 billion. It's a program for small businesses as well as nonprofits. And you can apply through any SBA 7A program lender, whether it's a bank, a credit union, or there are some CDFIs who are already approved as SBA 7A program lenders. What's different is that until the CARES Act was adopted, nonprofits did not have access to SBA loans. So this is going to be something new for the sector. And I think that SBA has tried to make the application process as simple as possible, but we'll spend some time as part of this conversation kind of going over what nonprofits need to do in order to apply for that loan program. So there's the PPP program, we'll call it that for short. And there's also a disaster loan program, which has its own acronym. It's EIDL, which stands for Economic Injury Disaster Loan. And that's a program that existed prior to the passage of the CARES Act, but it's been expanded as part of that legislation to make it, to increase the funding and access to more organizations. The other benefit that I might want to mention, in addition to those two loan programs, which we're going to cover in more detail in a few minutes, is that there is an exception under the CARES Act for modification on charitable deductions for 2020. And I think a lot of people in the social sector were disappointed that it wasn't more expansive than this, but there is now a $300 charitable contribution deduction available to individuals who are, filing their tax return in 2020. And so for organizations who are thinking about how to outreach to donors in this time, you wouldn't want to, miss any opportunity to highlight this for your individual donors, that they do have an opportunity to support nonprofits through the charitable deduction on their 2020 tax returns.
Terrific, Jennifer. That's great background. And I know in particular that lots of nonprofits are interested in the Paycheck Protection Program, the PPP, in particular because it has a provision for loan forgiveness if the nonprofit maintains employment. I was wondering if you could tell us a bit more about that. Yeah,
I will try, and I'm gonna have to look at my notes for this, but I hope you don't mind if I'm not looking right at the camera for this portion. So as I mentioned, there's $349 billion of appropriation for this PPP, Payment Protection Program loan, and today, April 3rd, is sort of the opening day of the application period, which will remain open until June 30th of 2020. And applications will be processed on a first-come, first-served basis. That's our understanding. So we want to encourage nonprofits who are interested in this program to apply for the loan as soon as possible. There is a loan application available on the Treasury, U.S. Treasury website. I found it by Googling SBA PPP loan application. But I will also share a link with you, so that you can access that website directly. That's a 2-page application that organizations can complete and submit to any SBA 7A lender, whether it's one of your existing banks or credit union or another SBA 7A lender. And there are a couple of CDFIs that are that have 7A programs. The loan amount, the maximum loan amount is $10 million, and the loan will be sized based on a calculation that is simply stated 2.5 times your payroll and other expenses such as rent, mortgage obligations, and utilities over an 8-week period. One of the things that makes this loan different from many other programs is that there is an opportunity opportunity, a significant opportunity for loan forgiveness for nonprofits that maintain their employment. So it is going to be based on payroll costs, interest on mortgage payments incurred prior to February 15th, 2020, utilities defined as electric, gas, water, transportation, phone, and internet for service that began before February 15th of this year. The amount forgiven is reduced proportionally by any reduction in employees retained compared to the prior year, and also reduced by any reduction in pay of any employee beyond 25% of their prior year compensation. There are a lot of other specifics to how the loan forgiveness of the program works, and I think probably better that we provide some links so that folks can look at those in more detail. In addition to the 2-page application that needs to be filled out, you'll need copies of your 2019 IRS quarterly 940, 941, or 944 payroll tax reports, and those payroll reports need to show a number of different specific items, which we don't need to get into here. You'll also need documentation showing the total cost of all health insurance premiums paid under a group health plan, and documentation of all retirement plan funding provided by your organization.
Terrific. That's great background, and I'm wondering also, I know that some of this has been a moving target over the last couple of days, but do you have any the latest information on some of the loan terms, including interest rate and the terms of loans and things like that?
Yes, and you're right. That information has been all over the place. Just in the last week, it has changed a couple of times. So initially, what we heard was that it was a maximum 4% loan with a term of up to 10 years. In other words, any amount that was not forgiven based on the detail that I shared a minute ago could be termed out over that period of time. More recently as yesterday, a new SBA ruling was issued, and so the latest information available is that it's a 1% interest rate on the loan, and it's available for a maximum period of 2 years. So that's a big difference from where the guidelines started out at the beginning of this week. And so I would say, let's all try and stay abreast of any additional information that may be coming out there. Anecdotally, what we have heard is that banks, not all banks are ready to accept these applications as of today, April 3rd, because some of the guidelines to the banks, to the lenders, were only recently issued, to them. They are still in the process of coming up to speed on some of the rules and the guidelines, and so not all SBA 7A lenders are necessarily ready to go today, even though this is the first day of the application period. So just for reference, if anyone is trying to access the application online, it is SBA Form 2484, revised April 2020, and you can see that reference in the lower left corner of the form. If you pull it up online or print it out, you'll see that is that's the form that you'll want to refer to.
That's great. And Jennifer, so it sounds like one of the takeaways is that it's important for nonprofits to move quickly, but that some of the SBA lenders are not even yet, even though today is April 3rd, accepting loan applications. And so there's still time for nonprofits to get an application in for the program.
I believe so. our expectation is that the program will be oversubscribed because it's for small businesses and nonprofits. $349 billion is a staggering number, but when you think about how many small businesses there are and how many nonprofits there are, you know, you can start to see how the program could quickly be oversubscribed. And so that may mean that applicants are left waiting in the queue. However, we want to still encourage nonprofits to apply for this program. It's a significant benefit available to you. And there is already some conversation information out there that that the federal government will need to undertake sort of what's called a fourth stimulus. This was the CARES Act was the third stimulus, and so there is already talk of a fourth stimulus that that may provide additional appropriations to this program and/or may offer additional benefits to the social sector.
Okay.
So we're encouraging. I just wanted to add that we're encouraging nonprofits to start with your existing banking relationships, and you know, many organizations have accounts and relationships with multiple banks. We recommend that you start with your existing banking relationships. Ask which of those are SBA 7A lenders, and find out if they will accept your application, or what the time frame is for them being ready to accept your application. And it is my understanding that there's no penalty for applying through more than one SBA lender. But I can't, unfortunately, I can't give a definitive guidance on you know, whether it's better to use one bank versus another. That's just sort of unclear in the current environment. And I don't know, we're a nonprofit finance fund. We ourselves are a nonprofit, and we're trying to get some clarification from our existing bank relationships about whether or not they are accepting applications. And Ken, I don't know if there's anything you'd like to share based on your experience at TechSoup.
Sure. We've also been in the process of applying for a Paycheck protection program loan, and we've started also with our existing banking relationship, and we found that they're not ready yet to accept applications online, but they've sent us a checklist of forms and documents that they're going to need. So we've been working over the last couple of days and preparing all of that so that we can at least send it to them by email today, although it doesn't seem like they're ready to accept the applications online yet. And I had a question for you as well, Jennifer, because my understanding is that there's no collateral or personal guarantee required for these loans. Do I have that right? And I know that we've received the question if applying for this loan would in some way harm an applicant's personal credit scores, and I was wondering if you've got a point of view about that.
So yeah, my understanding is that there's no collateral, no personal guarantees required for the loan. It's a formula calculation. So once you've submitted all of your materials, it's a relatively straightforward underwriting process. And since there are no personal guarantees, this should not affect anyone's credit score. You're submitting an application on behalf of your 501c3, and so there is no personal financial obligation associated with this program. And I believe the same is true for the disaster loan EIDL program, which we can cover in a minute.
That's great, and maybe that's a good place for us to go next. If maybe you could say a bit about the Economic Injury and Disaster Loan Program and how it's different from the PPP program.
Okay, sure. So one of the other, before we get into the nuts and bolts of the disaster loan program, I also wanted to mention, because I think this is a question that some nonprofits will have, which is, can you apply for both loans? And there is conflicting information out there about that. And so I'm going to defer to one of our trusted partners, the Community Reinvestment Fund, or CRF. They're another national CDFI, and they're an approved SBA lender. And according to their webpage, a borrower who has also received an SBA disaster loan may still be eligible for a PPP loan. Again, because we think they're a trusted resource, I would suggest that if you're thinking about applying for both, that you can pursue both. It also says on the CRF website that borrowers are only eligible to receive one PPP loan. So just to clarify that for people who may be wondering. Now on the disaster loan, these are also low interest loans. You in the case of the disaster loan, you're going to apply directly to SBA, whereas the PPP loan, you will be applying through the network of approved SBA 7A lenders. So that's one important distinction that I want to make. For a disaster loan, you can go directly to the SBA website, and there's an online portal for the disaster loan application. It's a little clunky for nonprofits, if I can say that, because some of the drop-down menus ask you to sort of identify your sector, and they're sort of business sectors, not the sort of sectors that we are, that nonprofits typically fall under. So it's maybe a little bit of an awkward application process for a lot of nonprofits, because I suspect it wasn't designed specifically with nonprofits in mind. And again, that's a program that small businesses can also apply to. It's a low interest loan. I believe that the interest rate for the disaster loans is 2.75%. So it's a higher interest rate than the PPP loan, based on what we know today. I feel like it's important to say that, maybe more than once. And there's a provision in the disaster loan that allows for a nonprofit who is applying due to COVID-19 to request an advance on the loan of up to $10,000. And the advance does not need to be repaid. And from what I understand, that's even if your disaster loan is not approved. If you apply for a disaster loan and you ask for an advance, and our understanding is that the advance of $10,000 could be made available in as little as 3 days if they're not terribly backlogged, and that even if your loan was not approved, you would not have to repay that advance. So, we want to share that information and put it out there, because in this environment, a lot of organizations are really in a tight liquidity position. The disaster loan can be used for payroll, materials, rent, mortgage costs, and other debt payments. And there is going to be new guidance forthcoming from the SBA administrator. I have not seen it yet, but it's our understanding that the guidance will be available on or before April 11th. So you may want to keep checking the SBA website to see if there is new information. And of course, once we have that information available, we'd be happy to share the link with TechSoup so that they can share it with their network.
That's terrific. And it's one of the challenges with everything so quickly is conflicting information that's out there right now. We had heard that organizations can apply for both PPP loans and the Economic Injury and Disaster Loan Program, but have to use the money for different purposes. So I think, as you said, it's probably best for people to stay on top of the most current information and to confirm with their lenders. And I wanted to ask you also more generally, if organizations already have existing loan obligations, will that in any way make them ineligible for these other programs through the CARES Act?
I don't believe existing debt is a factor in the approval of these loans. there are some other requirements, and so you'll want to check those as part of your application checklist. But whether or not you have debt outstanding is not a factor in whether or not you'll be approved for an SBA, PPP, or disaster loan.
Okay, terrific. And Jennifer, I wanted to ask you, I've been reading some of the posts that your CEO, Anthony Buglevine, has been putting out recently about some of the challenges specifically for nonprofits in competing with small businesses for loans under this program. And I was wondering if you've got any advice for nonprofits regarding how to best position themselves to get loan funding through these programs.
Well, our understanding is that it's first come, first serve, and that may put nonprofits at a disadvantage because small businesses have had access to the SBA, 7A, and other programs. So we have heard that in some cases, SBA borrowers, sort of small businesses who have already borrowed from SBA, will be given priority. I can't speak to that definitively. So I guess what I would emphasize is that if you're going to apply for these programs, gather the information, get board authorization to borrow, and pull together your materials and submit the application as soon as possible. We can share some resources as we have information about lenders who are ready to process these applications. I would be happy to share that information with you. But again, I would advise any organization that has existing banking relationships to tap those relationships first.
Okay, that's great advice. And I'll mention also that Jennifer is sending us several links to additional information that will be including on the webpage along with the recording from the Zoom call, so that all of you in the audience will be able to access that easily. I know we're sort of coming to the end of our time. I had one more question I wanted to ask you, Jennifer. It's a question I hear from nonprofits often, and I think in difficult times like these that grant support is often a preferable way to get financial help for nonprofits, since it doesn't need to be repaid, of course, with the exception of the possible exception from Paycheck protection program. But for a nonprofit that is thinking about the possibility of doing a loan financing right now, is there any guidance that you can give them about under what circumstances it makes sense for a nonprofit to be thinking about a debt financing right now, and under what circumstances they might be reluctant or particularly cautious about doing it?
Well, I would say for the Paycheck Protection Program loan, it seems like a great opportunity for nonprofits to take on that loan because of the forgiveness feature that it contains. Given the uncertain economic environment, it's very hard to make a one-size-fits-all recommendation about whether or not debt is the right decision for your organization in this, in this moment. So we certainly understand the reluctance to take on debt, unless it's for something that is already a program or a project that your organization has committed to. And depending on where your organization is located, there may be local relief funds and or grant programs through your city. Some of these have already been announced, and I think it's likely that there are others in the works. Nonprofit Finance Fund was involved in setting up the New York City COVID-19 Response and Impact Fund. That came together very quickly with a group of foundations in New York City. So it's about a $75 million fund in total, consisting of it's about 2/3 grant and 1/3 zero interest loan program. So organizations in New York City that are in the human services sector and in the arts sector can can go to the New York Community Trust website or to our website and get more information about that fund. We are working in partnership with some other folks, including the Calvert Impact Capital and the Community Reinvestment Fund, to try and put together other funding programs for nonprofits that are still in development. So I would say stay tuned, and we are hoping that we're going to be able to mobilize additional resources for nonprofits. And we are not alone in this. There are a lot of other funders and impact investors who are looking for ways that they can be helpful. So as we are wrapping up, I would say, please apply for the PPP program and also for the disaster loan program if it seems to make sense for your organization. And then just, stay tuned as additional programs may be announced. I think we're all going to be watching for more information to be forthcoming in the next few days and weeks.
Terrific. Well, Jennifer, thank you so much for spending time with us today. I know this is a really busy time for you and Nonprofit Finance Fund, and we're also so grateful to the Nonprofit Finance Fund team. You've been such terrific friends and supporters of TechSoup over the years, so thank you for everything that you're doing for the sector. As I mentioned before, we have several links that Jennifer shared with us that we'll include on the webpage along with the recording from this Zoom call, along with contact information if you have any additional questions that you'd like to ask of Jennifer and me. We also have a TechSoup COVID-19 resource page with more information about technology products, services, and training that TechSoup has made available to nonprofits to support them through this outbreak, and we'll be sharing that information also along with the recording. That brings us to the end of our program today. We hope that you're all staying healthy and safe, and we appreciate your spending time with us. Thank you so much again, Jennifer, for your time today, and thanks to all of you who participated in the call.
Thank you, Ken, and thanks for all that you and TechSoup do for your clients. We appreciate it.